KWT slaying.
What if the truth was never lost, only buried? For centuries, historians, scholars, and even colonial records have confirmed what many tried to silence. The original Israelites were a black people scattered across continents but never erased. Their skin was dark, their customs ancient, and their covenant with Yah eternal. This journey uncovers how the Spanish and Portuguese Jews, described as dark-skinned, Semitic, shared one bloodline. Chased by the Inquisition, many fled to Portugal, then beyond, preserving their heritage across borders. But the story doesn't end in Iberia. Across from West Africa, black Jews built synagogues, kept Torah, and passed down the laws of Moses. The Limba in southern Africa, the Igbo in Nigeria, the Beta Israel in Ethiopia, tribes across the continent boldly declare, "We are the children of Israel." These aren't isolated claims. These are voices rising from the dust, connected by oral histories, Torah traditions, and the unbroken rhythm of their identity. No such legacy exists among European Jews. No centuries of tribal witness, no matching traditions, no trace of ancient covenant keeping. Maps, art, and archaeology tell the same story. The Israelites were scattered, enslaved, and displaced, but never lost. The world always knew who they were. Their presence was visible, their customs alive, their story intact. This book doesn't speculate. It confirms the Israelites were black, bound by blood, culture, and covenant to the Most High. This is not just history, it's restoration. The truth was never destroyed, only buried beneath centuries of deception. Get your copy of They Always Knew We Were Israelites today, available now on Amazon.com.
Salama family, Salama, how y'all doing today? Hope you're blessed and highly favored. So we have Brother Fast Nickel again today. Brother Fast Nickel, say hi to family.
Shalom, family.
So family, we're living in some interesting times. Things are on fast forward, moving very, very fast. So let's get into this. Take it away, Brother Fast Nickel.
Thank you. Let me go ahead and share my screen. Okay. I have so much information, family, that you're probably going to want to come back and watch this 2 or 3 times just to take notes, because there's a lot of things that I feel that it's important for you all to know of what's happening in the next few weeks to months. So as the title says, don't believe the FUD. The future of money in real time, because really that's what's happening now. As we like to say, this is not financial advice. The information is in this presentation is for educational purposes only. So the first thing I want to mention is the word paradigm shift. I know that most of you know what that is, but the definition of a paradigm shift is a complete change in how people understand approach or do something. It happens when old systems, beliefs, or methods are replaced by new ones that redefine the standard. Now, I just wrote down a couple. So if we start from 1776, the American Revolution was a paradigm shift. If you look at the 1800s with the Industrial Revolution, that's another shift. The Civil Rights Movement of the 50s and 60s, women in the workforce in the 40s through the present, and globalization and outsourcing in 1980s to 2010s. But if you look at what's happening now in the digital currency, we're shifting from paper money to digital currencies. Blockchain and crypto challenge traditional banking systems marks the next frontier in finance and economic sovereignty. The reason, in my opinion, that this is important is because it is the event that opens the door for what the book of Revelation speaks about, the market of beasts. So this is, in my opinion, a twofold shift that's happening. And so those of us with the spiritual understanding, we have to really be paying attention going forward to what's going on. Why is this information important? A typical day of a US citizen is we wake up in the morning, we go to work, we come home, we eat dinner, we watch TV or the news, and then we go to bed. And Brother Yacoba, you mentioned this, I think, on your last show, that because none of what we have been talking about for the last 12 to 24 months has affected Americans, most are not interested in crypto. They either don't believe or they'll say they'll deal with it when the time comes. But the truth of the matter is, when you're ready, you may not have the opportunity. So I want to just give a quick real life example. So my wife Coco and I were watching TV, and I got a text from a family member that I only see maybe every 2 years at family reunions. So he texted me and he said, "Hey, cuz, do you mind if my nephew calls you? He's got a question about crypto." And I said, "Sure." So he called me and he said, "Hey, I went and I saw this Bitcoin ATM. I don't know if everybody's familiar, like some stores you'll go to and they'll have an ATM, but instead of getting money, you can buy Bitcoin." So he put a couple of $100 in it a couple of months ago, and now it's worth almost $5,000. So he says to me, "The problem is I don't know how to cash it out." I said, "Well, all you need to do is send it to an exchange. You get your receiving address and send it to an exchange." And so he said, "What's that?" And I'm laughing to myself. I said, "See, this is the problem. People don't realize that if you don't really understand what you're doing, you got to hope that you know someone that understands. But generally speaking, there's no 800 number to call." So what you see here is a screenshot from what he sent me. So he invested $868 at a Bitcoin ATM to where it now is worth $4,700. And this was 2 weeks ago, so it might be worth a little more or a little less. But of all the wallets he could have downloaded, the problem was he downloaded a wallet that's not made for you to hold your crypto. It's just a wallet that's made to track your crypto so you can know what tax you have to pay. So of all the wallets he picked the wrong one. So this is why it's important to know what you're doing or reach out to someone like me or family or friend that knows what they're doing, because as we've said in the past, this whole system is unforgiving at the moment. So Brother Yacoba has talked about digital ID. I'm going to just talk a little bit about that.
And I told you that this was coming. I told you that digital IDs are coming, and they're here. And we ain't even had breakfast yet. Can I get a hello? So what do I think about this? First and foremost, I always say stay free and stay empowered. I don't want a digital ID. I won't need one and I won't have one. That's my stance on it. What's yours, deep divers? You got to remind yourself that there was a big announcement by Keir Starmer, the Prime Minister of the UK, saying that he wants to make, and he's going to make, digital IDs mandatory in the United Kingdom, and you won't be able to work without one. Okay, so that's big news, because you see, the UK is often all about freedom, liberty, and all of that, but now it seems like the UK is turning into an Orwellian nightmare. And actually, since his announcement, check how many people have signed the petition, deep divers. Do not introduce digital ID cards. So 2 million people, more or less. And it's going to be over that. Probably will get to like 5 million people or even 6 million people. So a lot of people in the UK are refusing it, right? They're signing the petition. So let me play you what the Prime Minister said in the UK, over in the UK, and then I'm going to really break it down, deep diver. So pay attention to this. Let's go.
And that is why today I am announcing this government will make a new free of charge digital ID mandatory for the right to work by the end of this Parliament. Let me spell that out. You will not be able to work in the United Kingdom if you do not have digital ID.
Now, the reason I wanted to play that is for two reasons. For one, for those of you that watched or listened to Journey with Us was talking about if you're looking to come from America to Africa, you want to try to avoid the UK or Europe in general, because if you go to Africa by way of Europe or the UK, and if you decide you don't want to do the digital ID, they will turn you back into the US. So what they're saying is when you come to Africa, try to get a ticket to South Africa so you can bypass the UK. So that's some advice that they were giving. It's good advice if you're trying to, if you're looking to go over to Africa in the next few months and you want to make sure to avoid having a layover in Europe somewhere. Now, before we begin, Brother Yacoba, do you have any comment about what we just saw about the digital ID? Because I know that you've talked about it in your past shows.
Well, we all know it's one step away from the mark of the beast. And we know that Switzerland already has the mark, right? Some of them have a chip in their right hand. And
Yes.
So we're already in these times. The question is, what's your plan? And, I've been making my plans, and now, I have some of my family coming on board who's also, who ready to talk about it, right? About making a plan. So that's been my whole point is, what's your plan? Because the Bible tells us to flee, and all of the people that have been gaslighting you and telling you you're not going to have to flee, you're going to have to deal with the same thing they deal with.
That's right. Those of you that have been in crypto for a few years, you're probably familiar with the term the 4-year cycle. So when you look at the 4-year cycles of Bitcoin and cryptocurrency, we have one common factor, and that is the Fed. So with that said, this gentleman, his name is Arthur Hayes. He is the co-founder and former CEO of the cryptocurrency exchange BitMEX. He is the youngest African-American crypto billionaire in history. I know that a lot of people didn't know that, but he is, when he talks, people listen. So I want you to hear something that he said at an event in Europe that just went on last week.
Let's talk about one last thing, which is the 4-year cycle. So in 2 weeks' time, it's the end of the 4-year cycle. Right. don't know if you know that, but really in 2 weeks' time, that would mark the end of the 4-year cycle. It doesn't feel like the cycle's about to end in 2 weeks. At least to me, it doesn't feel like it's about to end in 2 weeks. What do you think? Is it like a longer cycle? Is it the end of the cycle now? How do you see
I think that we need to talk about liquidity, money printing. If you believe that all of a sudden the forward curve on the growth of money supply is all of a sudden going to flip lower, flat, negative in 2 weeks, cool. That's the end of the 4-year cycle. If you don't believe that, then okay, the cycle will last as long as the cycle lasts. If you think about the last 3 major 4-year cycles, 2013, we have the taper tantrum, the United States at the Fed, right? 2017 was the repo crisis of the Fed. These are all tightening moments in Fed liquidity. 2021/2022, inflation is transitory until it's not, then the fastest hiking cycle ever since the 1980s for the Fed. Every 4 years. Okay, well, what's happening today? We had the Fed Governor Moran talking about the third mandate, how they need to print money to keep the moderate interest rates. You have Trump trying to take over the Fed by firing all governors who don't agree with him to print more money and take control of the monetary supply. You have Secretary Bessent talking about how he needs to engage the banking system to print more money to build more bombs so they can bomb people. I don't see anyone talking about not printing any more money. I just got off of stage talking about how I think France is going to exit the euro and the ECB is going to print trillions of dollars to stop that from happening. You have the Bank of Japan still not hiking rates fast enough, still printing money. China exiting deflation. What are they doing? Talking about housing market buildbacks. So tell me where the liquidity is not coming from.
You spoke about France exiting Frexit, you called it. Why?
Basically, if you take a look at the target imbalances, France has deteriorated the most in sort of the EU architecture. And the French state requires German and Japanese money to finance it as foreign bond holders, foreign equity holders. Now that America is saying you no longer can export all these goods to us and earn this mercantilist income, we want to do the same. Germany and Japan must invest domestically themselves. They are going to pull money from France and all around the world. And no longer will the French government be able to finance itself from the Germans and the Japanese. And that's what's going to predicate a crisis in France, imposition of capital controls, and the ECB will have to print now or have to print later.
Awesome. Always good to speak to you, my friend.
Thank you.
Now, what I found pretty interesting about that is, Brother Yacoba, you've been talking. We know that Africa is in the process of kicking France out. And so with that being said, it's almost like all the doors for France are being closed because of the tariffs. Now, Germany and Japan, who were helping France, are not able to help. Now, they may go, the IMF may step in to help, but if not, France might be the catalyst to cause Europe to collapse. I mean, that's just my thought. I mean, we still have to see how things play out, but based on what he said, do you have any thoughts about that?
Well, what it looks like to me is like even when you look at what the U.S. is doing with Venezuela, and we know that the U.S. mainly wants that oil. It's a fight for resources, which is why they've been fighting Russia through proxy, and that Europe and the U.S. was financing that whole warfare. And so since the people on the continent have been controlling all of their resources, now France has no backup money, right? Because they're not sending them these, they CFA anymore, and the resources. So what I see happening or potentially happening is every man for himself, right? Because I think, and I'm just theorizing, that there is a balance for power in this move for who's going to control the new world order. Right. And so that's why the U.S. has distanced itself somewhat from Europe, and Trump talking about leaving NATO, and how France was talking about building their own army. Right. And that's because who's going to rule this age, this new age, this new world order age of, digital currency, crypto, AI, and all of this stuff. Right. So America, in my opinion, is abandoning Europe in some sense. And I think that Europe is going to end up betraying America, which is why you see in the Bible, the 10 going to hate the whore and burn her with fire.
Right.
Because just as America has always done, right, you're only you're only our friend as long as we need you. When your usefulness is gone, we don't care anymore. And I think that's what we're dealing with, is a jockeying for control of the new world order global system, which also includes BRICS, right? BRICS is going to be the next power, right? I mean,
Right.
you know, it's just what it is. So
I agree. Now, this is something that I found out yesterday that I found really amazing, and it's about silver. Now, before I show you what I'm going to show you, back in 2016 and 2017 and 2018, I was begging family and friends to buy silver. Some of them listened, but I was buying the silver that I bought at the price of $14 to $20. And if you guys haven't taken a look, today silver is at $50 and gold is at 4,000. I mean, it has skyrocketed. And so I'm going to show you a video about silver that's pretty amazing.
Longer cycle. You say, okay, Bitcoin is going to only go parabolic in about 2 months. That should give us a much longer cycle, right? So both charts are important. We are tracking the gold chart with the 80-day lag, but it's actually much bigger than that. And I'll show you why it's much bigger than that. Because it's not actually about the chart, and it's not actually about tracking the commodity. It's about the reason why this is happening. When you understand the reason why this is happening, and that will show you why the silver chart is starting to move, then you'll understand why I'm so excited about the Bitcoin move and why there's no way that the cycle basically ends now, okay? So let me explain to you what's going on here. The first part of it is you need to understand the correlation. So you've got the global M2 money supply. The global M2 money supply basically represents the amount of money in the economy or in all economies, right? When you look at the global M2 money supply, gold lags the M2 money supply, right? So you've got gold and the M2 money supply, and then you've got the M2 money supply and Bitcoin. Gold lags the M2 money supply, and Bitcoin lags gold, and therefore Bitcoin also lags the M2 money supply, right? It lags the M2 money supply by about 100 to maybe 180 days. So sometimes they say 6 months or whatever else. And it lags gold with 180, 200 days. I've been trying to get the right number of days, but it's very, very, very difficult to actually put your finger on exactly a number of days. But suffice to say that the leading chart here is the global M2 money supply, which represents all the money in circulation. Then gold follows that. And that kind of makes sense because when there's more liquidity, people get nervous of things like inflation. And what they do is they buy the safe haven asset or the limited supply asset, which is actually gold. And then later on, people move into Bitcoin for the same reason, right? But the trade is actually much deeper than that. And the deeper part of the trade, you can kind of see when you look at these two charts over here. So the first chart is the Dixie. If you look at the Dixie is broken down since the beginning, since October 22, from 115 all the way down to where it is now, which is 99. It's just broken below that 100 range. And if you look at it since when Trump came in, or just after when Trump came in, since after the inauguration, it's gone from 110 to 98. What that means, it means that the dollar is devaluing. Okay, so the dollar is devaluing. Why is the dollar devaluing? We'll talk about that in a second. But the dollar is not the only currency devaluing. The other currency that's devaluing is the yen. So you've got these two major currencies that are devaluing. This is the Dixie. The Dixie shows the correlation. Let's just quickly get you guys the exact. Okay, there we go. So it's the euro, 57%, the Japanese yen, the British pound, the Canadian dollar, and those are the components of the Dixie. If you look at one of the biggest components of the Dixie, it's actually the Japanese yen, right? And so what you're also seeing is that the Japanese yen is also devaluing. So if you look at the chart of the Japanese yen is also devaluing a lot. So you've got two and actually a whole lot more of the world's major currencies being devalued. What does that actually mean? It means that countries are devaluing their currencies to get themselves out of financial messes. What I mean by financial mess? Well, for example, if you look at where the US is at the moment, the US still actually has quite high inflation. They've got inflation at about 2.9%, and Powell is reducing interest rates. It's the same thing when you look at Japan, right? Japan actually has high CPI. So look at the Japanese CPI, also 2.7%, and they're not increasing the interest rates either. And what you're then getting is you're getting both the Dixie and the US dollar both weakening at the same time. And Arthur Hayes refers to this as the debasement trade, right? So he says the new TradFi meta narrative is the debasement trade. It took them almost 20 years to notice. Don't believe for a second that they're going to just forget about the debasement trade because of the 4-year cycle. So what they're realizing now is that the world's major currencies are starting to debase. Countries are starting to print their way or to loosen financial policy to get themselves out of trouble. And what that's doing is it's putting more money into circulation. That more money in circulation is pushing up risk assets. And so when you look at any risk asset right now, every single risk asset is basically ripping. You look at the SP 500, all-time highs. You look at gold. Look at that. Look at the SP 500 chart. You look at gold. Gold, all-time highs. You look at the NASDAQ, all-time highs. You look at all of these are all at all-time highs. Look at the Nikkei. I haven't looked at the Nikkei today, but I'm almost guaranteed that there's all-time highs, right? So what you're getting is you're getting a currency debasement, but you're not getting it from one country. You're basically getting it from all the superpowers of the world. It's almost like usually the countries devalue one against the other, but now they're all like devaluing and devaluing and devaluing and devaluing and devaluing. And what that's causing is it's causing people or the market to actually start worrying. And so what are they actually doing? Wall Street has realized that there is this debasement trade, and Wall Street has realized that gold and Bitcoin are merely doing, as Pomp says, gold and Bitcoin are merely doing what central banks have failed to do, to protect the purchasing power of the people. And so what the people are doing is they're starting to put their money into gold and Bitcoin. They no longer trust the central banks. The central banks and the governments are all have basically all let them down. And now they're all starting to move into these currencies. Now, you know what happens when a currency starts debasing? It starts to accelerate parabolically. And probably the best way to see that is if you take the JPX index and you invert the scale over here. So you take the index and you just invert the scale. Look at that chart. The chart is a parabolic chart, right? Why is it a parabolic chart? Why is it so important that it's a parabolic chart? Is because once you start debasing, it becomes an accelerating process. Absolute tear. The best way to visually look at this is to look at this debasement trade chart, which we actually made, right? And what you can see is you can see all the risk markets going parabolic, which is gold, Bitcoin, S&P. You can see Bitcoin's lagging gold in terms of the parabola. And that's happening because the Dixie is going down. And if you want to see it even better, you just add the Japanese index, and you can kind of see those two are going down, and then all these are going up, and all these are going up proportionately. So that is the debasement trade. That's the theory behind it. It's all about more global money supply and the current currencies that we have basically being debased and devalued amongst each other. But then we get to the more important chart, or the chart that, in my opinion, is much more important. And the chart that is, in my opinion, much more important is the silver chart. Now, let me show you why I think the silver chart is a much more important chart. If you look at the gold trade is becoming a very overtraded trade. That's the chart of gold, and that's the RSI of gold over here. If you look at the current RSI of gold, it's trading at 92, okay? 92 on the RSI is the highest the RSI has ever been in gold. Look, you can go back. I've gone back, not ever, but I've gone back all the way to 1980. And right now, gold is the most overbought that it's been since 1980, okay? When a chart goes parabolic and the RSIs go very high, naturally the RSI corrects and the trade actually corrects. And I think that that's exactly what's going to start happening here. I think the gold trade is becoming overcrowded and overtraded. And I think that what's going to happen is the gold trade is going to start cooling down. And when the gold trade starts cooling down, the question is, where's everybody going to go? Now, what we know about this is that when the gold trade overheats in TradFi, the market actually moves into silver, right? So if you think about it like this, capital flees fiat for gold. This is the safety trade. We've seen it before. Once gold gets overbought, the same capital looks for a higher return, just like in crypto, when capital goes to Bitcoin, and then from Bitcoin we go to ETH, right? They'd go from gold into silver. And now what you can see is on today, silver actually breaks it's finally breaks the multi 50-year pattern and actually does the cup and handle. Now, the thing with a silver break is that a silver break is a very, very, very strong break. And the reason why it's a very strong break, just look at the break here. That was the first silver break. You see, well, there was actually one here, but I don't even know if I can get that time frame to see it. So that was the first silver break there. This actually shows you, I mean, this will blow your mind. So that was the first silver break of the first cup and handle. So that's the cup and handle there over there. And that was the first silver break of the cup and handle. It took silver from $1.90 all the way to $7, which is big. Then we broke from $7. That's the next cup and handle. We broke from $7 and we went to $47. Again, it was a 7x. Okay. So the first move in silver was from here. It was from $1.90 all the way to $7. That's about a 4x. The second move was from 7 all the way up to 49, which is about a 7x move. Then we have now a 50-year cup and handle. And imagine we just get a 7x move here on silver. Silver goes to $200 or $300. And in fact, just before the show, I landed up buying a little bit of silver, not a lot, just in case this does what I think it's going to do. I want to be there for the ride.
Now, just to kind of go over what he said, he talked about the dollar devaluing, the yen devaluing, and the Dixie devaluing. He also talked about countries that they're watching the debasement trade and that they want to print money out of trouble. We know that once they do that, all assets go up in value: property, gold, silver, expensive watches, paintings, crypto, you name it. So because of this, the superpowers are actually pushing up the risk assets. So as he said, the S&P 500, gold, NASDAQ, they're all on the rise because the markets are worrying. And not only that, they've already mapped out in the next 12 months, they plan on releasing 100 crypto ETFs in the next 12 months. And I added that this is all in line with Brother Jacoba's video that he did with the Maserati, where he talked about we're about to enter the wealth transfer. So like everything is falling in line for you to make a lot of money. Now, I want to show you one thing that also is happening. Let's see. Let me just show you this real quick. This came out today. Brother Jacoba, would you show my screen, please? Thank you. Let me put that back.
This is not a drill. Silver is on its way to unobtainium this month. Silver Baron, everything, everywhere, all at once. The silver squeeze is real and unlike anything we have ever seen before. Well, actually, we did see something. I've seen something like this. It was actually worse than this. I'll tell you about it in a minute. Australia, Africa, Canada, Vietnam, Costco, everything is gone. The impacts are increasing every day worldwide. I give the silver market maybe a week before it fully starts to melt down. And that's Tim Hack. And Trump Clock responds, "You mean melt up?" And he does. And if you click through this here, the individual photos, the market sniper says no silver Krugerrands are available in South Africa. Rand Refinery's statement below. And so this is their statement saying they're out, sold out. Chris Sauer, I guess, I'm not sure, No silver or gold at any Costco locations in Ontario. And also, the Royal Canadian Mint is also sold out of almost everything. Silver Baron, everything, everywhere, all at once. The silver squeeze is real and unlike anything we have ever seen before. Well,
so I wanted to show you that people are panicking when it comes to the silver. So this is not financial advice. If you have some silver, you're in a good shape. So let me go back to my presentation. Okay. Okay. Before I continue, Brother Yacoba, do you have any questions or comments? Because like I said, this is falling in line with your presentation that you mentioned about the Maseroth, in my opinion.
Yeah, a lot of the issues I have is how all of this is going to play out, right? The particulars is sort of like we know these things going to happen, but what's our role in it and how we navigate, right?
Right.
And sort of like even with the whole thing, what people call the flee doctrine, right? We know we got to flee, but when, right? And so, but I know it's near. So for me, I think like for everything at this point, it's a matter of preparation, right? You got to prepare, financially, physically, mentally, stuff like that. This is the time of preparation, like I showed in my other video. That's the season we're in, but we're going into the season of the oppressive beast, right? And they're moving pretty fast.
They're moving very fast. One thing that we always talk about the banks, but we really never talk about the credit unions. And so I'm going to take a moment to talk about the credit unions.
Awesome. And then here's a question for both of you. How would you describe the current state of adoption of stablecoins and just, even tokenized deposits or other, on-chain financial instruments, across global payments? And what are some misconceptions? And maybe what's something, you wish just, more people in the industry would know?
John, I'll let you take it first, and I'll comment.
Well, we're laughing because there's a couple of very significant data points that we get asked this question a lot.
Yeah.
So for the credit union leaders out there, and those institutions are particularly significant to us here at our business. I run into too many executives who believe that these are niche, new, unproven technologies, and I like to point out statistics like the market cap of the Bitcoin network alone, that one token, that one global network, the market cap value of that is larger than the entire U.S. credit union industry.
Yeah.
When measured in market cap, it's about 8x or close to 10x the liquidity of the credit union industry. So I think that another misconception is that consumers are afraid of this stuff because it's only used by underbelly types. The numbers around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only, growing bucket of electronic payments, and we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025. So
now, if you break down what he said, one is he said that the credit unions feel that crypto is a niche, unproven technology, but he's saying also that the market cap of Bitcoin is bigger than the entire market cap of the credit union industry, which I found that fascinating. But I'm not shocked because Bitcoin's market cap is bigger than a lot of the Fortune 500 companies. He's mentioned about consumers being afraid. And so with the digital payments system is about to go parabolic in the fourth quarter, I mean, if you think about it, Brother Yacobo, when you brought me on your show last November, that's when XRP was about 58 cents. And from the time we did that show is when it shot off like a rocket.
Yeah, I mean, everything really dealing with the beast system is moving very fast. And so we would expect the digital currency to be taking off because they can't have their system without it.
Right.
And so just as we see the UK pushing that digital ID, you have to have that before it goes global with the digital currencies, right? So that they can tell you what to buy and not buy and control, give you your universal basic income so you can be an obedient slave, right? So, yeah.
Needs to be, in my personal opinion, again, this is my personal opinion, backed with research via people with credentials, that everybody really needs to focus on building a passive income plan and crypto, a retirement plan and crypto, not via selling your digital assets, but learning how to put them to work for you and pay yourself with your.
So in past shows, I've mentioned to you how you're not going to have to sell your crypto. You're going to be able to borrow against it. And so there's basically two rules of thumb to think about. Is I know that maybe a lot of people figure, hey, you know what, I'm going to sell my crypto. And I would only do that maybe if there's property or something, a big item that you're looking to buy. But at the same time, they're putting the processes in place so that you can borrow against your crypto. And so when you do that, it's not a taxable event. Now, with the things that Trump is doing, we may not have to worry about taxes anyway. We don't know. But that's something to think about, because especially what we want to be able to do is put ourselves in a position where we're self-sustainable and we don't have to be concerned about their system, at least as long as possible. Now, remember, it's only 5 years from now when we're going to hit the 2030 agenda. So he mentioned passive income. So with AI coming for your jobs, in my opinion, it's only about a 5-year period before no one is safe. As you will see later in this presentation, the bearer of the asset is more valuable than the person that holds the asset at a bank or brokerage firm. So what that basically means is those of you listening that have crypto, you don't want to let go of that crypto because it's going to be valuable. And the main reason is because it's a finite supply. Unlike fiat currency, they can constantly print it. That's not the case for crypto. Once the crypto is gone, it's gone. So therefore, it comes down to demand.
So one thing I want to add is that, like we talked in the past about that window of being able to use the crypto, right? They're going to want to get us all to, to onboard us into the new system. So it's not going to be initially, in my opinion, oppressive, right?
Right.
But you're going to have to take that money and go and buy some land, some houses, some food, whatever, in another country. Yes.
And it's funny because you bring that up because a slide or two, I talked about that because we both know they don't do anything for us. When they come across smiling and, oh, you're going to love it, that's when you need to run for the hills because you know that they have a nefarious agenda behind it. So I put this came out this morning from Morgan Stanley. Now, those of you who understand stocks, for instance, Ripple is the company and XRP is the crypto. You can't buy Ripple stock unless you're an accredited investor. An accredited investor, you usually have to have a Series 7 license, or you have to have, I think, $200,000 in the bank before they'll consider you an accredited investor. But today, Morgan Stanley is dropping restrictions on their wealth clients. So basically, starting October 15th, they're saying that they're going to be able to pitch funds to anybody. See, because of this system coming on board, they want everybody in because they plan on trapping everybody. So we have to be very careful. Now, look at this. So it goes back to what you were just saying, Brother Yacobo.
So listen here to what she says to just back what Aqua pretty much just said to you guys.
And in order to understand even basic things like staking or various yield generating products is a step that a lot of people don't take. And I don't expect you to speculate on what we need to do to educate the world on financial education. Like, that's an important thing that everybody needs to do. I just hope that they take advantage of that, because I just don't know that they will, especially when so many people have cash sitting in, their savings account, and they could click one button right now and put it into a treasury. And a lot of people don't even do that. And that's not even using blockchain or crypto, right?
But this is where I do think that AI is going to be super helpful, because just like what we were talking about with MetaMask allowing you to now use your Google or Apple wallet sign in and not have to remember your seed phrase, right? I am not going to have to make these personal decisions, right? Today, if I want to take advantage of all of these different yield-bearing opportunities around my investment portfolio, I have to actively manage the use of my tokens in that manner. In the future, when I buy an investment portfolio, my onboarding document may have a little clause in it that says, would you like us to optimize the use of your assets? And if I just click yes, this may all happen automatically without me having to take an action, right? That is the beauty of smart contracts and the ability to automatically execute based on pre-programmed contract terms. A lot of this may just happen automatically on my behalf. And the same is true for cash, right? We talked about cash and what's going to happen with my cash and my savings, right? Today, every institution in the world, every hedge fund in the world, every corporate treasurer in the world, every single day, they sweep all of their undeployed cash into yield-bearing money market funds. And that money sits in those money market funds until the next time they need that cash, at which point they can sweep it out of the money market fund, put it back into cash, and spend it, right? This is too going to become an automated function that every person is going to have in their portfolio. Why would I sit with a stable coin in my account where I'm not earning yield on that stable coin? I would sweep that stable coin into a tokenized money market fund. And if I need that cash back, I can sweep it out of that tokenized money market fund and have that cash available within seconds. We already offer this.
Now, think about what she said. She said with AI, they will make everything easy for you. And that's your downfall. So you really can't be lazy. Those of you who, for instance, have taken my courses and learned how to get a cold wallet or a hot wallet where you have to have your own private keys, you do not want to get rid of any of that stuff, because if anyone who's lazy, who says, hey, I'll let them do it for me, now they've got you, because now the moment you say or do something they don't like, they're going to cut off your wallet. And now you're at their mercy. And so you must have a contingency plan. You've got to have a plan B, C, and D, because as Brother Yacobo likes to say, you got to play 3D chess here. You got to think 2 and 3 steps ahead.
Credit unions, and we think, guys, this is not just credit unions, this is people as well. Some of the credit unions are worried about offering their members, their loyal members, something like cryptocurrency, and then they lose their money. They lose their money. So that's the biggest fear, which is why Metallicus, they only trade the particular cryptos that you can buy there, because they have deemed that these particular cryptocurrencies are proven. They are not going anywhere. They're not speculative. These are going to be the backbone of the crypto industry, not to mention their own batch of crypto that they have, the XPRs, the loan, metal dollar, it goes on, right? So that's why. So they educated them that they don't really have to worry about that. Yes, crypto is volatile, but that's why they only offer a select few of the cryptocurrencies that are not going to burn people, as long as they know that they're still volatile. And I got that list for you guys. We're going to go over and we're going to check that out right now. This is the list, and this is what you can buy on MetalPay. Here we go right here. So I went over and I was doing some, and it says what cryptocurrencies are available for trading on MetalPay. And here we go. We got Metal blockchain. That's what I'm in. Metal dollar, of course, this is their stable coin. They got XPR, another one I'm in. Loan protocol, another one I'm in. I got this locked. Then you got the majors, Bitcoin. You know this Dogecoin right there, Ethereum, HBAR, Litecoin, Stellar, USD coin. Well, I mean, like these, I don't really count. They're stable coins. And then you got Cardano, you got your XRP, and you got Solana. So if you were just going off of this list right here, guys, and this is for my novice, this is where your money is safe. Is again, that's not financial advice. I'm giving it to you from the people who know. This is what you're able to buy on their chain.
Now, what he's saying here is obviously there's thousands of cryptos out there, and we know that crypto is volatile and they're here today, gone tomorrow. So through Metallicus, they have a wallet called the WebAuth wallet, which I have this wallet. And so with that wallet, you can go to they have deemed these cryptos safe. And everybody is pretty familiar with these cryptos, you know, Stellar, Litecoin, a lot of the ISO 20022. So like, if you're someone who says, man, I'm afraid, I don't want to lose my money. I mean, this is not financial advice, but at least if you were to just stick with some of these coins, you know that these are the coins that the banks believe in. And on the right, just for the purposes of time, I put some access to a bunch of the different websites that are connected with MetalPay. Here again, you can go to the X channel. MetalPay is a connection. It's an ecosystem. So this is an ecosystem that the credit unions are looking to use to do for their clients. So those of you who are already buying crypto or want to buy crypto, those are some safe cryptos to buy. Now, I want to show you a couple of projects that I think are worth watching. So based on that, Metal is right now at 38 cents. It was 38 cents 2 days ago, so it might have gone up or down, or it might be the same. You know, Stellar XLM is at 40 cents. Ripple is around $3. RSR. Now, here's the funny thing about RSR. I owned RSR about 6-7 years ago, and then I sold it. And Brother Yacoba, I don't know if you remember this, you reached out to me like, I don't know, 8 to 12 months ago, and you asked me about RSR. And I said to myself, man, you know what? I used to have RSR. Let me look back into it. And then when I saw that Peter Thiel was into it, I went and bought me a bag of RSR. So it's still less than a penny. I look for these nuggets that are less than a penny that I know are going to do well. And I shouldn't say I know, but Peter Thiel behind this, RSR is behind this, and even I'll show you in the next slide. But so Algorand, so like these are some coins that I would definitely keep my eye on. Also Quant and Stronghold. So I just have them listed again here. So for instance, if you said to yourself, okay, I got $200 or I got $500 and I want to allocate it into those tokens, I have a breakdown here. You can say, take that 100%, take that $500 or that $200 and put 25% into XPR, 20% into metal, 15% into XLM, 15 into XRP, 10 into RSR, and then 15 into algo. And the reason why that's a good way to do it is because it's acting now like an ETF. All cryptos don't go up at the same time and they don't go down. You know, they all randomly do their thing. So this way you are never in a case where all of your cryptos are going down. So it's a way to have a good foundation of coins if you were looking to get into these coins that the credit unions are looking at. So just giving you a breakdown by type. You've got the payments layer, which is XPR, XLM, and XRP. That's a payments layer. So you can put 55% of your money into those three. We talked about tokenization. Metal and Algo are dealing with the tokenization part of it. And then you got the stablecoin protocol for RSR. So if you took $100, you can put 55% of it into XRP, XLM, XRP, 35% into metal and algo, and then 10 into RSR. The reasoning is XRP and metal help keep Proton at the center, but hold its backbone chain in capture upside from ecosystem expansion. XLM and XRP are balanced between retail and institutional payment corridors. RSR adds stablecoin exposure. It's tied to real world inflation hedging. And Algo brings in government level tokenization and CBDC growth. Some other optional adjustments: if you want higher growth, raise your metal and RSR to 25% combined. If you prefer stability, boost your XRP and XLM to 40% combined. So where are we and where are we going? So right now, we have what's called the Internet of Information. That's Google. It's built on centralized data networks like Google, Facebook, and Amazon. It focuses on sharing, storing, and monetizing information. You search, click, and consume. Data moves instantly, but money and identity do not. Trust is outsourced to intermediaries, banks, governments, and platforms. So an example is you send an email instantly, but sending $1,000 across the borders takes days. The next wave is the Internet of Value and the Internet of Trust. It's built on blockchain, tokenization, and digital identity, focusing on transferring value and ownership directly between parties. Trust is programmed into the system through smart contracts, not a middleman. It enables real-time settlement, self-sovereign identity, and transparent audit trails. So as an example, you want to send $1,000 or a digital asset instantly, the same way you send an email today. So Google's role in the transition is that Google mastered the Internet of Information by organizing global data. So to stay relevant, it's moving towards the Internet of Value and Trust, building blockchain infrastructure through Google Cloud Web3 partnerships, running validators for Solana, Ethereum, and Aptos, integrating crypto payments and digital asset APIs. And that's where Quant comes in, developing digital ID frameworks tied to trust and verification. So to summarize it, the Internet of Information, which is where we were, is data economy, Google's original domain. The Internet of Value and Trust, where we're going, is tokenized economy, blockchain driven, verified identity, and smart contracts and AI. Together they form Web3, where you control both your data and your value. I know I hit you with a lot there, Brother Yacoba, you have any comments or questions?
No.
Okay. So think about this. First they want to get you used to a wallet, and then they're going to get you to implement the chip, because if even those that don't go to church pretty much have at some point in their life heard this mark of the beast. So if they were to just come out and say we're going to chip everybody, people would be outraged, because the first thing they would think about. But they do it the smart way. They get you into the wallet, and people are going to just smoothly transition to where they say, hey, we can make it even easier for it. Let's put a chip. And there's a lot of people going to fall for it, in my opinion.
All right, so I called up Aqua and told him about this video right here. This is the Cybos 2025 event that took place just a few days ago. Man, this dude was spitting some absolute gems, bro. He was talking about how digital wallets are going to be key for future business infrastructure, and how all of these organizations are going to be issuing their own wallet so that they can utilize stablecoin features, like posting stablecoins as collateral, bro, just all kinds of crazy stuff, right? And he was talking about how the regulatory clarity has shifted, and the recent regulation has allowed financial institutions to finally feel comfortable to go into this full scale. And it just aligns so much with what's happening with what Sandy Call said, how we're going from, this account-based system into this wallet-based system, which I'll play for the audience real fast so we can get that out of the way. But dude, this just goes hand in hand with what we've been researching. And honest to God, again, without sounding like a shill, if you just do the research, a lot of it is what Metallicus is aligned with what they're building now with WebAuth Wallet, how they have the ability to provide financial institutions, specifically credit unions, the ability to create compliant, regulated stablecoins with their own brand on top of it. It's crazy what's taking place right now. So again, just do the research. It's right there in front of our eyes. This is honestly a crazy moment in history that we have access to this type of information. And so it'd just behoove everybody to put the ego down for a second and not be biased towards certain projects or certain other people's opinions in this space, and really just dig deep into the research. So what am I doing real quick? Showing you that video of Sandy Call, because I know we posted it. Sandy Call talking about us going into this wallet-based system from an account-based system. Let's see if we can find it. I know me and Aqua posted it. There she is right there. Let's see. Aqua, what's up with you this Sunday, bro? Real quick while I'm finding this video.
Man, I'm feeling good, about to hit this gym. Once we done here, get my lift on for the 14th day in a row.
So just
she's not on The Voice. Okay, what she say? Few people have an advantage point, regulated frameworks. Hold on, is this where she says it?
policies and assets we own, a savings account, a brokerage account, a retirement account, maybe an investing account around that. We have lots of different accounts.
Yeah, this is it. All right, so listen to Sandy Cole right here. This is where she's talking about in this interview. We're about to transition into this account-based system. Pretty sure this is the one.
Right? So just to kind of go back to simple framing, right? Underlying it all is a really foundational change that people need to wrap their minds around. And that is, for the last 50 years, we have been having an account-driven system. So you and I, we probably have a checking account, a savings account, a brokerage account, a retirement account, maybe an investing account around that. We have lots of different accounts. We're moving away from the account-based world to a wallet-based world, where we're going to have one wallet. That wallet is going to be able to contain all of our assets. It's going to contain the digital forms of money that we spend. It's going to contain the digital investments that we hold. It's going to hold our digital identity documents. It's going to hold digital copies of the titles to the insurance policies and assets we own. right? It's going to really be the foundational piece of financial architecture for our lives. And all those things you mentioned, right? The stable coins are putting the cash into the new wallet-based ecosystem. Tokenized money market funds are putting the savings accounts into the wallet-based system. Now we're seeing tokenized stocks and bonds putting the investments into the wallet-based system. So this is what I mean by the migration. These feel like a lot of different things happening at once, but if you look at the underlying theme that ties them together, it's that we're starting to see the assets move away from the account-based to a wallet-based ecosystem.
Wow. And she specifically said at the beginning, this is something everybody needs to wrap their minds around. You know, they're telling us this straight to our face. This is not some, oh, it's not happening thing anymore. This is knock, knock, knock. Hello, wake up. The financial system is changing. And if you aren't on board, you risk being left behind. That is the era that we are in right now, y'all. So,
and those capabilities to the T-WebAuth wallet can do that. So I don't know. I can't speak on other wallets right now in this moment, really. But the only wallet that I can think of that can do everything that she just said is the WebAuth wallet.
I think that there's going to be a multitude of wallets in the future that exist that do this, but we're definitely at the forefront of seeing winners and losers, right? Winners and losers. And you really got to pay attention to who the winners are, who has the technology in order to really build infrastructure that is going to be required for these financial institutions in a regulated, compliant manner for them to onboard. Come on, guys and gals, this whole entire structure is changing. And if you don't pay attention, again, so this is a video breakdown, bro. This one's going to blow your freaking mind. Okay. This is, let me just get his credentials correctly. Stephen Richardson, Chief Strategy Officer and Head of Banking at Fireblocks. Fireblocks partners with hundreds, if not, I'm pretty sure thousands of financial institutions. I think it's like 1,800 institutional partners Fireblocks has. You might need to fact check me on that, but it's definitely more than 100 banks are messing with Fireblocks, right? So regardless if my numbers are correct or not, you just kind of get a gist of who they are. So this dude's not just some nobody, right? And this is a Cybos TV event that was released just on October 3rd, 2025. Shout out to the researchers for this. This entire playlist from this entire event is in our CyberX Discord, and there's so many gems on it. Listen to what this guy says here. He talks about there is regulatory clarity for banks to engage in these digital assets. I repeat, again, he says there is regulatory clarity for banks to engage in these assets. That is a huge wake-up call to anybody that's still screaming regulatory environment isn't sound anymore. It's not sound anymore. No, that's changing, and that mindset that we used to have a couple of years ago needs to shift with the changing tides. We need to understand that things are now changing. All the previous uncertainties that exist, and as we continue to mature in the digital asset ecosystem, the environment's going to change. And if our mindsets and how we react in terms of our actions don't change with it, again, you risk being left behind. So check this dude out. Listen to what he says here.
Banks are no longer debating if stablecoins matter. They're now asking to scale them as part of their core financial infrastructure. As global trend, it's clear regulation is enabling, not hindering, and stablecoins are moving into mission-critical payment and settlement flows. And for
I just had, bro, that right there. He just said stablecoins are starting to move into mission-critical flows. Okay.
More on this, we can speak to Stephen Richardson, Chief Strategy Officer and Head of Banking, Fireblocks. Hello, Stephen. Welcome to Cybos TV. I hope you've been enjoying Frankfurt over recent days as much as we have here. Now, banks have moved beyond asking why stablecoins matter and are now focused on how to scale them. What factors have driven this shift in strategic thinking and at the leadership level?
Yeah, so I think most clearly it's around the utility, around the use case. I think when stablecoins launched, they were quite niche in terms of solving problems for crypto native players. Over the last few years, you started to see stablecoins be utilized by payments firms, PSPs, as a mechanism of really enabling both retail and SMB type payments on a cross-border level, right? And there's real utility in terms of speed, transparency, and costs for utilizing stablecoins. And so as you started to see a shift in that model, as you started to see clarity around regulation in places like the US with the Genius Act, in the EU with MiCA, in places like Hong Kong towards Japan and Singapore, I think there's now regulatory clarity to engage with this new asset on chain. And there's a commercial opportunity that we've seen as being viable in terms of really solving some of the pain points around money movement for corporates and for retail. And so I think this is galvanizing the business to really look at the opportunity that exists and to look at the areas of value proposition that a bank can add in terms of utilizing a stablecoin.
So the dude just confirmed 3 different regulatory shifts that have taken place that have now given banks and financial institutions the clarity in order to start interacting with these digital assets. You all heard that, right? That's crazy work right there. You know,
What and where are they at? What country are they in?
this is in Frankfurt in Sibos, the event that took place just a few days ago.
Okay.
All the biggest banks, all the biggest and largest financial institutions and fintechs go to meet and talk about the future of finance.
Okay.
Bro, in these videos, you know what's so crazy to me? The world is so lost, you guys. Y'all, our followers listening right now. This is one of the biggest financial events in our modern society where all these financial institutions go meet up every year. It's just like, it's almost as big, if not bigger, than the World Economic Forum Davos event that happens at the beginning of every single year in January or February. It's like the same thing, except the end of summer event where all the banks and all the biggest fintechs and all the biggest financial providers, MasterCard, the Visas, the Swifts of the world, the freaking Euro Clears, all the central banks, they go to meet here.
I
Okay.
see.
Yeah, bro. This is a huge event. And look at this, bro. Look at the views on these videos.
Dang, only like 144. Like they're not even in the thousands. Low
Bro, the world is asleep right now, bro. Look.
So I wanted to show the end of that because it's amazing the information that they are releasing, but they're getting like 100, 200 views. Like the world is not even really in the information's there. They're just not paying attention to what's going on. And it's sad that that's what's happening, but it's the reality of where things are at right now. Now, as I mentioned before, those of you that have hot and cold wallets, do not get rid of them. When this system comes into play and they're providing you wallets, do not get rid of your current system of wallets, because that may be the only protection that you have. And I'm going to show you this where I said, what if you could not buy crypto?
Here's an uncomfortable truth. One day, you may wake up and realize you can no longer buy digital assets at all anymore. Not because the technology failed, but because access has been taken away. Exchanges have been rolled up, liquidity has vanished, and suddenly the only way to own digital assets is through products built by Wall Street. The free market has never been the end game for these institutions. It was just the testing ground. And in this video, I'm going to break down the real playbook institutions running, why they never actually built the infrastructure for you to own assets directly, and how Tether could trigger a liquidity crisis. It clears the field, which, guess what, would give the banks what they need to roll it all up into structured products, which is a system they already control. And this is the story that nobody's telling you. And by the end, you'll understand why the window to direct ownership of digital assets is closing a lot faster than most people realize. So let's talk about what I think the real end game is. My name's Jake Claver. I'm the director of Digital. We actually provide a way where people can own their digital assets inside institutional custody outright, not in omnibus accounts, not in a way where they're owed back to you or they can be taken from you, through Anchorage, who is our partner for institutional custody. So I'm having these conversations and I see what's happening. Exchanges, when people think about them, they think freedom, right? It's an on and off ramp. You can take your assets, put it in your cold wallet, which is direct ownership of the bearer asset. And that's how a lot of people think about this, right? If you're in crypto, I'm sure you've heard, not your keys, not your crypto. And it's true. But that is a radical way of owning something. It'd be like taking the stock certificates for your stocks from your broker and putting them in a safe in your house. People haven't done that since the 1920s and 1930s. Okay. It's a long time ago, but effectively, that's what you're doing with your digital assets. The same thing with gold. Most people own gold through an ETF or another structured product. Well, there's been, a theme here lately where people have realized that these paper derivatives are manipulated. And so there's been a trend where people have gone back to direct ownership of gold, but then you got to worry about insurance and vaulting and where it's held and all of these other things that you don't have to think about when it's institutionalized. So that's why.
Now, what he said, some of the things he said is instead of having to keep track of your wallet and seed phrase, most people would rather go to the omnibus structure. And basically what the omnibus structure means is letting someone take care of everything for you. So please don't let your laziness, complacency, or lack of knowledge be your downfall, because they want you to let them control what you have, because now they can tell you what to do, what not to do. Now, Brother Jacob, I just wanted you to know that this guy here, Jake Claver, he runs a multi-million dollar, if close to $1 billion investment firm that you have to have either 50,000 XRP or over $100,000 for him to work with you. But he has a real-time bet. It's online. You can watch it. He has an online bet where he will give the bet is he will give $3.5 million if XRP doesn't hit $750 a token by the end of the year. I hope he's right, because if it hits 750 by the end of the year, I'm good.
Most people would probably rather own it through a structured product, and the institutions haven't really built out the infrastructure for people to have direct access to these digital assets. They've been building the rails for settlement for themselves and not retail. Believe me, we've had a lot of frictions and frustration trying to get things to where we are today to actually be able to provide this for people. And when you have a Coinbase account, it's just like a bank. They have an omnibus structure. You have a tag number. There's one wallet. They hold all the assets in. They might have a couple different wallets where they hold stuff, but for the most part, they're commingled and they owe them back to you. If there's a bankruptcy, good luck. We saw this with Celsius, FTX, Voyager, and many others in the space that have been wound up over the years because of different situations where people have just been out in the cold. They didn't get their assets for years. If they got them, they got, far less than the value of what they were at the time, or what they were at the time and very different value than what they are today. But none of this is built for direct ownership. And I think there's a reason for that. I think over the long term, the whole play all along was to roll these into Wall Street under structured products. And that's the institutional blueprint for how this is going to work. We've already got ETFs. We've already got notes. We've already got derivatives. You've also got trusts that have gone public, like GBTC. And now we're getting more and more of these structured products. Now you've got DATs as well, these digital asset treasury companies, where you can invest in the company and you indirectly get exposure to the underlying asset. And those are the plays that Wall Street and institutions want to have happen, because now they're scraping fees off of all of those trades. And they don't have to worry about holding your assets. It's much easier for them to operate with an omnibus structure. They have full control of the situation, and they're making a spread, when you're trading those products as well. So they're making the fees, and you don't have to worry about all the other cumbersome stuff that goes along with, holding these assets on a cold wallet and the radical ownership that comes along with that. But at what cost, right? You're not going to be able to get direct ownership of these digital assets in the future if some of the scenarios we're going to talk about in this video actually play out.
Now, what he's talking about is bearer assets. So all of you here that own crypto on a hot wallet or a cold wallet, that is considered a bearer asset, meaning you are in control of that crypto. You have direct ownership. The omnibus structure that he talked about is like a broker manages trades for 500 clients. So for instance, let's say everybody on this call was to send me $100 and I buy Bitcoin for everybody here. that's an omnibus structure. Now, he also mentioned DAT, which stands for Digital Asset Treasury. And I sent an example of this to my Q&A group just the other day. So as an example, there's a crypto called BNB. It's the number 3 crypto at the moment. It's at $1,300. About 4 weeks ago, it was around $780. So it's gone up about $400 in a month. Now, somebody might say, okay, that coin has gotten a little expensive for me. I don't want to spend $1,300 at this point. Well, what you can do, I've never been a stock person in the past, but now I'm getting into stocks because stocks and crypto are kind of working together. So what's happening is you have what's called a digital asset treasury. So when you look at Binance Coin, the Binance Coin is $1,300, but the holding company, which is CEA Industries, BNC, that stock price is only $10.35. So I even asked ChatGPT, and ChatGPT said, yes, it's a strong buy because supposedly CEA Industry holds 418,000 BNB tokens, which at the current value would be $546 million dollars. So basically, if you wanted to buy some of the BNC stock, it's undervalued at the moment. So that's potentially a good buy because we can see that the BNB crypto is doing tremendous.
It's in the past already, right? Like I talked about before with the gold ETFs, most people own derivatives. They can hold that in their qualified account, in their 401k or their IRA. It makes it very simple to get exposure to different asset classes if they are offered through institutions. And then they can manipulate the price and they can do some other stuff that, some people don't enjoy. But if it is all on the blockchain and it's immutable and we go to tokenization of a lot of this stuff and it's audited, a lot of that's going to go away anyway, which I think is great. It creates efficiencies and other things that I think are going to happen to make other things that I think will make markets much cleaner to participate in. But I do think this is the inevitable future. Digital assets are going to be packaged and not necessarily free flowing. Now, will you have the occasional ICO or something else comes out after the Clarity Act? Possibly. But it's probably going to be accredited investors or qualified purchasers that get access to that. A lot of this stuff where retail or non-accredited people have access to these things that are very high risk, it's very unusual. The CFTC, the SEC, and many other, regulatory bodies don't want non-accredited people to be able to participate in these markets. They deem that they are too risky. And a lot of the time they're right. There's a lot of people that I know that have lost a lot of money because they just weren't educated. They didn't understand, how to not get phished, or they invested in the wrong project, or they thought they were investing something that they weren't. And so because of that, I don't want to say that you need the amount of protections that some of these regulatory bodies want to impose, but I do think there needs to be some investor protections.
Now, I think that what he's saying might happen closer to 2030. That's just my opinion. But he mentioned tokenization. We've talked about that in the past, real world assets, credited investors, and phishing. I'm more than certain that most of you have gotten phishing emails. You'll get an email that looks like it's authentic, but it's a scam and they want you to click on the link. So you really need to pay attention to text messages and emails because they are looking to get your crypto or your information.
Let's talk about under what circumstances this could actually play out, where demand outpaces the access. If you watch some of my other videos, I believe there's a supply shock coming for XRP and potentially some of these other digital assets that now have ETFs issued for them. If you own the underlying asset, that's called having exposure to the bearer asset. And there's a finite supply of a lot of these digital assets. Now, some of them they can mint more, and it depends on the tokenomics. But for a lot of the utility-driven assets, there's only a limited supply that's available on the market. And after we have institutional adoption of these assets, and people are using these protocols to settle value or secure infrastructure, or for a lot of the other applications that I think are going to come, a lot of that's just going to get eaten off the market. And there's not going to be a whole lot that people can even get access to, unless, again, it's through these structured products. So, and the other piece is exchanges really can't scale to institutional adoption and volume. They don't have the distribution. And I do think that they're going to have some regulation put in, or they're, a broker dealer, or there's some oversight from these regulatory bodies. Whereas right now here in the US, they just kind of openly operate freely. And a lot of people can't even get access to perps or other things, products, and exchanges if you live in certain jurisdictions like New York because of the BIT license and, the things that you have to have in place. You also have other exchanges and different protocols, geofencing the US to keep, US investors out, even though they can use a VPN and broadcast and they get exposure anyway. But at the end of the day, scarcity is what's going to pull this market into a position where the institutions kind of corner it. And retail, I do think, is going to get cut out in a very large capacity.
Now, we are retail. And so he believes, and I do believe too, that they are going to try to eventually cut us out. And I just want everybody to understand that not investing is not an option, because you look at the difference between cryptocurrency and fiat dollars is supply. The Fed can print unlimited supplies of money. If you had $1,000 in 1900, you would need $38,000 today to equal what you purchased in 1900 for $1,000. If you had $1,000 in 2020, that $1,000, you now need $1,250 to buy the same thing you bought. So investing in stocks, precious metals, crypto, property is what you need as a hedge against inflation. This is why it's not taught in schools. They don't want you to have financial freedom. Crypto has a finite supply. Bitcoin is mined, and once the total supply is mined, there is no more. So you have supply and demand. This is why I am a fan of quant, because it has a more limited supply than Bitcoin. I had a whole section on XRP, but I'm going to skip that just for time's sake. But I just want everybody to know, if you don't have a clue about crypto, you're afraid of crypto, I put together a very simple course for $49 to teach you the absolute basics: how to buy, how to sell, how to transfer from wallet to wallet, and how to protect yourself from phishing emails, and what are some emails and use of VPNs out there. If you have understanding, yes, you can join some of my memberships. But if you don't, I highly advise you to first get a basic understanding for yourself. And if you do have an understanding, but you have friends or family that don't, I would recommend that they take this course that I offer. I mean, I go into detail, and the people that are in the chat that have taken my courses or have been with my Q&As, they will tell you I take my absolute time. I answer questions. I really help people to understand, because there's nobody out there that you can call. So that's what I want to say. And I just want to show you this one thing that, just to give you an example. So I'm not much, like I said, I've not really done a lot of stocks, but about 2 months ago, I started, when I got paid, I would take $25 or $50 and just buy some stocks. And just in that short period of time, I'm up 18%. And I bought Coinbase, I bought Nvidia, I bought Palantir, and I bought United Health. And the reason I bought United Health is because of Warren Buffett. But also, if you look on the right-hand side, the Nvidia and United Health, which I didn't even know at the time, but those two, not only am I making a little bit of money on the stock, but it also pays a little bit of a dividend. So if you're going to buy some stocks, you definitely want to look at tech stocks and AI stocks because they are really where they're going to put the money. And look at also the ones that are giving you dividends because that's additional money. And like I said, I only invested, in a few months, I invested a total of $275. I made $51. It may not sound like a lot, but it's better than not making anything. So I'm just pleading that you guys do something. If you don't want to do crypto, do some stocks, do property, do something, but you have to have a way to hedge against inflation. And when you look at
Brother Fast Nickel, you want to answer this question?
yeah, it's kind of hard to imagine crypto being allowed without having the mark. What's the dollar? Well, so saying once the dollar disappears, I think that's maybe 5 years. I think it all may play out to the 2030 agenda.
Yeah.
We have that 5-year window to do things and maybe not even 5 years, maybe only 2 years.
Yeah, I don't think we have 5 years,
26.
but but I do think like you were saying, Fast Nickel, from what my research is, the mark of the beast, they have planned for around 2030, 2031, 2032, right? So there's always a transition period, like we've said before, and that's where we're coming from. This the monetary system is going to change, and hopefully, we can avoid the mark of the beast. But everything is coming so fast, so
it really is coming fast. And those of you that have some crypto, take advantage over the next few months. I think crypto is going to explode. Just use it wisely. That's all I can say. I'm not a financial advisor. I'm just telling you what I see. And like I said, for those who take my classes or my Q&As, I don't offer anything to them that I'm not doing. So they know that I'm not offering something or telling them to buy a crypto that I wouldn't buy. But that's all I have, Brother Yakova. I hope you enjoyed it. I hope it was enlightening and eye-opening for everybody to hopefully, like you said, have a plan and do something. Like doing nothing is not an option. You have to do something.
Yeah, and once again, going back to a lot of people in the community that gaslight you. Well, I'm not going anywhere. I'm not leaving for 10 years. I'm not fleeing. And I'm like, do you see what's happening? And so that's why, I've always made the analogy of if you saw a storm coming, a hurricane, you making plans, right, to leave in case you get hit or it's coming your way. And it's the same thing, right? You have to have some kind of plan. You can't just go out there and say, well, I'm just going to trust God, or I'm going to trust the Most High. But the Most High told you to, prepare to flee, right? Same thing when we look at Exodus, right? They had to, pack up, right? They had to pack up and get all their stuff ready to leave. I'm like, however that is in a modern sense, that's up to you. Let me put that up there. This Brother Fast Nichols website, if you want to go get some more information. Any final comments, Fast Nichols?
No, the only thing is to your point, I always use the story of the woman with the issue of the blood. Yes, she was praying, but finally she took an action. She did something against the grain. She went amongst the men. She touched the Most High's garment. Like, you have to do something. Like, just sitting back and saying I'll wait for things to fall in my lap, that's not necessarily going to work.
Yeah, see, the thing is, you have to know the word, and then you have to act on the word, right? On the thing you believe. I've always given the example, and I don't know if it's a great example, of if you had a chair, right? Let's say somebody you trust a lot and they built this chair and you like, I'm not going to sit in that chair. Then you don't have faith that the chair going to hold you. So you don't have faith that they did a good job. It's sort of the same thing. The Most High told you what to do, right? We're going to leave, but you don't know how we're going to leave. You don't know the steps we have to take in preparing to leave. This is not the old Exodus where we put things on a cart and get our cows and animals and roll on out of here. It's not the same way. And so, you got to figure out how that works for you and your family. You have to have a plan.
We have to have a plan.
a lot of people gonna be caught unawares, right? Just look, put it this way: the Most High could have just protected Jacob, right, during the famine.
Yeah.
But they had to go through this whole cycle of Joseph going into captivity, going to Egypt, and then becoming second to Pharaoh in order to protect not only him or that family, but even Egypt itself, right? So, we make up in our mind how we think things should be, right? But the Most High wants you to act on it, right? And he has a plan. And sometimes Joseph has to go into captivity in order that for everybody else to be blessed as well. I'm just saying, our people want to ignore that. I think we stuck in Eurocentric Christianity, right? This blind faith that doesn't require you to act.
Exactly.
Hot water cornbread, fast nickel classes are amazing. I'm learning. So yeah, fast nickel the best. I'm gonna tell y'all that, very easy to learn. He's there to help you, clarity, and he's trustworthy, right? So out of anybody, fast nickel the one. That's my recommendation. You're cool. So that's it, fast nickel.
That's it. And I told, just to end with this, I told this to Brother Karras this morning. I said, our people are lucky because they have Brother Karras helping them with the geopolitics side. They have you and Sister Ashonda helping on the spiritual side, and me trying to help on the financial crypto side. I mean, we got all the angles covered.
Exactly. And that's the thing too. I'm gonna be honest, y'all need to support us because we're trying to help you, right? And so a lot of y'all ignore it, like what we're saying isn't important. I mean, it really boggles my mind how people can't see where we're at right now, because we are literally smack dab. I told y'all, I think we in Revelation 12. That's where I think we at, and about to go into Revelation 13. So do with that what you will.
Amen.
All right. Thank you, Fast Nickel. We appreciate all the knowledge. Someone has a question. Let me
Sure.
put that to you.
Is Trust Wallet a good wallet to have? It is. It's one of. I do have the Trust Wallet. I do use it. What I will tell you is you don't want to have just one wallet, just like you don't want to have one account. Have a multitude of. For instance, I have 3 hot wallets. The more crypto you start to obtain, you don't want to keep it all in one location. You want to spread it out between wallets.
Yep. So, but it's a lot to learn, and definitely you want to go to Brother Fast Nickel. He makes it easier for you. I'm gonna tell you this. I told y'all I'm a techie, right? I couldn't have did all this without Fast Nickel's help. I'm sorry, it's complex. But they're gonna make it at some point where it's easy, but then it's gonna be too late.
Yeah.
So, all right, Fast Nickel, thanks for coming on.
Thank you so much. Shalom, everyone.
All right, fam. That's all we got. There's a lot of things that's happening, and a lot of people not, they just not gonna get it. A lot of people gonna be caught when the storm comes, and the storm's almost here. And just think about what our brethren are doing, brothers and sisters in the UK have to deal with this impending digital ID, right? It's coming here, right? It's coming here, and we got a dictator in office. So you can imagine. I don't know what to tell you other than seek the Most High, fast, pray, but do something, right? Do something. Don't just sit there and, hope for the best. And, if you want to support us, you can by becoming a Patreon member. You can also give Cash App, $TOTW7101. You could go to tillministries.com, click on the donations tab, and you can also buy my brother's book. They always knew we were Israelites. You could buy my book, True Jerusalem, the Lost Kingdoms of the Israelites. Peace out. Well, family, the wait is over. The moment has arrived where truth emerges triumphant from the shadows of history. Introducing the True Jerusalem, the Lost Kingdoms of the Israelites, the groundbreaking work by me, Yaakov Vale, a journey into the past that reshapes the future. I cut through centuries of misconceptions with piercing clarity. This book delivers a compelling case packed with evidence that commands attention and gonna get some respect. Come with me for a second, family, and discover how these thrilling civilizations flourished, protected by towering highlands and sustained by advanced engineering. Some have asked, where is Jerusalem? Is it the land in the Middle East? I say no. It is in the highlands of Ethiopia. With hours of groundbreaking research, this book brings in a new revelation, and it will transform your understanding of African history and its connections to the ancient world. It's going to remove from your mind the conditioning by the Romans of what has really happened to our past. Come with me, family, to the Ethiopian highlands and find out why this is our land. Why things have been hidden and obfuscated for centuries. We are royalty, children of the Most High. What kind of land do you expect us to have? Dried up dirt in the Middle East, or land flowing with rivers? A land full of beautiful animals flowing with milk and honey. Don't miss out on this monumental unveiling. Grab your copy today and stand on the side of truth. Visit Amazon.com or www.tailministries.com to purchase your book and join Jacoby Vale's teachings on Tail Ministries. Family, your journey to hidden history has now begun. So family, get your copy of True Jerusalem, The Lost Kingdoms of the Israelites today. Journey to the heart of Africa, where history and legend converge to reveal the forgotten kingdoms of the Israelites and the true location of Jerusalem.